Google and Meta both delivered strong earnings reports, beating expectations and reigniting some hope for the digital advertising industry. Google's search ad revenue returned to growth after slipping in the previous quarter. Total revenue came in at $69.8 billion versus $68.9 billion expected. And Meta's revenue, which had declined for 3 straight quarters, is also growing again. It's up 3% year over year. Google and Meta shares rose 5% and, get this, 15% respectively. So, Scott, just a few months ago, the digital ad industry was in extremely rough shape. It's something we wrote about. This seems like a dramatic and unanimous turnaround here. What do you think has changed in digital advertising?
This is really interesting. So, again, you guys pointed out that Google has done some sleight of hand here and done some creative accounting. And essentially part of their earnings call was them saying that their cloud business had become profitable for the first time. And the analysis that you guys had performed basically said that no, they just took a bunch of expenses out of the cloud division and reallocated them elsewhere, such that Sundar could say that their cloud business, which has traditionally been unprofitable, is now profitable. It going from 69, the growth is okay here. It's nothing dramatic. I think Google is looking for a story here because I would imagine there's a pretty big overhang from sort of their, all of a sudden they seem to be behind in AI, but nonetheless.
Yeah. Well, so just to interrupt on that, what I'll say about that is true about the accounting, and they basically just subtracted $1 billion from their depreciation costs, which seems a little ridiculous. But if you're looking just at the top line, which they can't adjust, the top line is back to growth. The growth isn't massive. It's 2%, but it was in decline the previous quarter. So I just want to be careful that there are certainly two sides to this.
So it's up 2%. So the economy is growing, with inflation. That's barely beating that's not even beating inflation, right? And it's probably not matching. And does it match GDP growth? Yeah, slightly beats GDP growth, but effectively this is now a mature company.
Yeah.
And what's more striking is, or more interesting, is Meta's earnings. And effectively, Meta has doubled in the last 6 months, but it's not back to where it was 12 months ago. And what you have is a couple of things. One, Meta's stock acceleration is a function of a couple of things. One, they have embraced the business strategy of 2023, and that's layoffs or efficiencies. They've now laid off, I think what are they in the teens now? They've laid off a significant number of their staff, and no one misses them so far. And two, the market now believes that the Zuck is waking up from his big gulp grande vente ayahuasca hallucination of the metaverse, and that all of that will flow to the bottom line. They think that there's probably a more sober Mark Zuckerberg in store for the company. And then finally, I think that all of the tumult or distraction at TikTok is really helping Reels. The thing that was super impressive was just how on fire their short form video Reels is. Yeah. And I find even just, and this is anecdotal evidence, but it was confirmed in the earnings report, I'm watching a lot more Reels just because the interface, they control so much interface because people are on Instagram so much. So I think it's a few things. One, the market thinks maybe that he's waking up from this crazy slumber, or coming out of this, coming to from this crazy fever dream of the metaverse, and will begin recognizing some of those cost savings as they reduce their investment in the metaverse. Two, they think that the biggest winner from a hamstrung or a punished TikTok, hands down, will be Meta. And also the stock was clearly just overpunished. At its low, it was trading below what a mature manufacturing company trades at. So it was a great trade about 6 months ago. But even the fact that it's doubled in the last 6 months, it's still not back to where it was, say, 14 months ago.
But I just want to point out, you said for your 2023 predictions that Meta would be the best performing tech stock of the year. Year to date, Meta is up 90%. So, whether or not it's equal to where it was a year ago, your prediction is coming true.
It just got oversold. I just remember looking at it thinking, okay, people, people are valuing this company as if it's going out of business or if it's a mature business, and it still sits on top of a cash volcano. By the way, just to correct the record, Meta has laid off 24% of its staff since 2022. That's a quarter of the people at Meta have gotten pink slips. That is dramatic. And all of that is going to feed to the bottom line. And another prediction we made, Ed, is that by the end of this year, in the back half of 2023, despite decelerating growth at big tech, you would see record profitability because my thesis is they're going to be able to cut costs, and no one on the front end, no one who buys advertising, no one who uses these products is going to notice that they've laid off all these people.
And we should talk about advertising specifically. So ad impressions are up 26% year over year. You mentioned Reels. Apparently, Instagram usage is up 24%, and that's all thanks to Reels, according to Meta. We were talking a while back about how the Apple privacy changes have basically killed Meta, and that how TikTok is competing and people aren't spending enough time on Meta. Something has happened in the past few months. One, Reels is working. But the fact that Facebook ads are now working again, I was talking to a friend who runs an e-commerce business, and he was telling me that after the Apple privacy change, the whole thing just got crushed. Customer acquisition costs went up. Nothing was working. And then he said in the past, basically 2 or 3 months, his CAC is way down and suddenly Facebook ads are working again. Yeah, and apparently this is unanimous across the e-commerce, businesses. No one can theorize what has happened. Facebook said that, they're using AI to improve their ads. I don't fully understand what that means, but something has happened here. Facebook has cracked this. Do you have any ideas what might be going on?
It does appear that Meta has figured out a workaround. Its impressions increased 26% and its ad prices declined 17%, which means that from a advertiser standpoint, Meta is now a better deal, right? I'm getting the same number of ad impressions for 17% less, which should grow share. Reels appears to be on fire. And also, I think people are probably less inclined to advertise on TikTok, not knowing what's going to happen to TikTok. I think that insecurity has probably played to Meta's advantage. And also, it appears that Meta has figured out a workaround around some of the privacy restrictions placed by Apple, and have figured out, and they used in the earnings call the term AI a bunch. Now, I don't know how much of it is substantive, but they claim they can use AI to help advertisers be more efficient in their targeting, especially across Reels. There's just no getting around it. The management at Meta, they're mendacious fucks. They're bad for the world, but they are very smart mendacious fucks. And they're good managers and really good business people. And it appears as if they are lowering costs while increasing revenues, and they are getting Reels working. TikTok might become the new Snap, and that is the R&D lab for Meta for the last 10 years has been Snap. Snap would innovate. Meta would say, okay, we'll take that and then monetize it across a broader customer set. And I would imagine that there's a lot of people poring over everything about TikTok's product and trying to incorporate it into Reels. And it appears it's working, but there's just no doubt about it. This is a really well-run company that it continues to levy damage on the world. Anyways.
And then finally, AI was obviously a significant feature in the earnings call. Reality Labs, less so. Reality Labs, which is their Metaverse division, had an operating loss of $4 billion. They brought in $339 million in revenue, which is down 50% from a year ago. Mia has this great stat. Fewer than 24% of online adults in the US said they were excited by the Metaverse. Is the Metaverse officially dead?
I think so. I mean, they'll try and claim that they're doing new things with it. They'll pivot to games, but the market has clearly perceived that he's woken up. And as far as I can tell, the Metaverse is just a bunch of incel panic rooms created online for people who it just isn't working. I mean, my favorite stat about Horizons World or whatever it is that MySpace currently gets more traffic than Facebook's version of the metaverse. So, and we think about that, 300 million on 4 billion in losses. I mean, that's a definitive thud. That's a deafening thud. And what the market perceives is the market says, okay, that's $3.7 or $4 billion that's going to go to the bottom line once they continue to sober up, once they have another, a little bit more coffee and get a little bit more sleep, and they're going to start funneling more of that $4 billion back to the bottom line.